Hey guys, good afternoon, everybody. Today is Monday, March 6th. It is 2:02 right now. Our scheduled mentoring session is for 2 o'clock. So it's a few minutes after. I'm going to go ahead and set up this room real quick. And then once we're done setting up, we can get started with our session for today. So if you guys have any questions, feel free to put them in the chat. Otherwise, I think for today, we're mostly going to be focusing on, on the trades that came up during the live session. So go ahead and just update everything here. Looks good. All right, perfect. Let me get this link sent out to you guys here in the group. And we will get started shortly. All right, perfect. Link sent out. I'll get a few moments for people to make their way in.
Come on. Come on.
All right, perfect. Link sent out, guys. So let's see if there's anything else here.
Hey.
All right, perfect. So people are still making their way in right now, guys. So good afternoon, everybody. Today's Monday, March 6th. It is 2:04 p.m. right now. Our scheduled mentoring session is for 2 o'clock, so we're just a few minutes over. If you guys have any questions, feel free to put your questions in the chat. I don't have any specific questions to cover today. The main thing we're going to be looking at is probably going to be the trades that came up during the live session today. So I'll try to explain as detailed as possible how I took my trades today, or just the trades that appeared. I know some of you guys have started to notice that I've been using, different confluences. We're still focusing on the main strategies with regard to the official entries, but if you guys are looking for small trades in between, or if you're looking for better confluences to, confirm your moves, there's a couple things that you guys can use to confirm that. So we'll be looking at that shortly. But if you guys have any specific questions, feel free to put your questions in the chat, and then we'll cover whatever you guys have. But I think for the most part, the main focus today is going to be, the trades that we looked at during the live session.
What happened?
Hey guys, how's it going? All right, cool. See who else is here.
Oh,
Hey,
you
Harvick.
want the shorts on?
How's it going? Hey, Martha. Good afternoon, guys. All right, so it's 2:05 right now. Looks like majority of you guys are here so far who typically attend the mentoring session. So if there's any questions that you guys have, feel free to put them in the chat. Otherwise, I guess we'll get started with the entries that came up during the live session today. So what I'm going to do here is I'm just going to go to the I'm going to go over to the time frames here, and I'm just going to rewind to about 8 o'clock because we got off the live session at 8. So I'm just going to cover what we looked at during the live today. There was a lot of trades that came up today. So as you guys have seen through the session today, that the market is moving very directional. So we didn't have this during February. This is why we didn't really have too many trades. We actually had 2 official trades come up today, which played out perfectly. They went pretty solid to profit. And that's basically the type of market that we're looking for. So I'm just going to go and rewind this to about 8 o'clock as well, and then back to the 1 minute over here. So I'm just going to rewind this all to around 8 o'clock because that's when we got off the live session. All right there. So this is pretty much going to signify, all of the market movement from this morning, basically from 6:30 up until 8 o'clock. Let's see, one question from Martha. Martha's asking, can we go over wick rejections in detail, specifically what you consider a wick rejection? So I think you might be making it like a little more complicated than it is, Martha, because realistically, a wick rejection is a wick rejection. So it's literally what it's called. Wick rejection is just if the wick is wicking off anything. So try not to make it like any more complicated than it really is, because like literally it's a wick rejection. So if you see a wick touching anything, that's a wick rejection, right? If there's an example that you're confused with, let me know. But I mean, I can't really go into detail because there's no detail to it. It's like literally if the wick touches any type of structure, whether it be the pivot, whether it be a session, whether it be opening price, anything like that, that's a wick rejection. So let me see your follow-up question here, Martha. Martha said, because sometimes the wick goes past the pivots. So would that be considered a wick rejection? So do you have an example for when that happened, Martha? Because I think you might just be overcomplicating it with regard to like, how it's identified. Because if the wick is touching anything, like if it touches any pivot here, let me just turn off the high-low, that's considered a wick rejection, right? So for example, I'll just go through a bunch of examples here. So look at this candle right here, right? See how this candle is touching the session? That's a wick rejection. See how this candle is touching two pivots? That's a wick rejection. See how this candle here is touching this pivot? That's a wick rejection, right? So do you have an example or a specific candle where you're kind of confused with? Because I do see your question, but I don't really understand what you're asking, because you're asking sometimes the wick goes past the pivots. It's supposed to go past the pivot. So whenever it's touching anything, that's considered a wick rejection. So is it, like, for example, see how this candle here is not, the wick's not touching any pivots? There's no wick rejection here. So there's a wick above and there's a wick below. There's no rejection anywhere, right? It's just out in the open. So to simplify things as much as possible, let me just turn literally everything off here. I'll turn off momentum just so I can make it as clear as day. So just to simplify things again, let me turn on the pivots.
I wanted to get my fucking hand.
Whenever the wick is touching anything, that's considered a wick rejection. This right here, wick rejection, right? This right here, not a wick rejection because the wick isn't touching anything. Let's see, right here, wick rejection, no wick rejection there. Nothing there, nothing here. Or sorry, there's a wick rejection here. I was referring to the red candle next to it. Nothing there. So do you see anything here on the chart, Martha, that's kind of like pointing towards like the example that you're referring to? Because I'm trying to figure out like where the confusion is. If there's anything, like if you have any number candle, just pull up like your chart, and if you see anything there that I guess refers to like what you're confused with, just give me the timestamp. So if you have the number right here, if you go over any candle, the timestamp will be on the bottom. So if there's anything over here that looks like something that you're referring to, just let me know. Or if there's an example you saw this morning, I guess I could look at like the candles over here, but I can't really understand the question there specifically. 1554. Okay. Is that 1554 Pacific time, or are you in a different time zone? I'll go to another chart over here just to, because it's not 15 here yet. Okay, so 15, that'd be 12:54 my time, because you're 3 hours ahead. So let me just take everything off the chart here again so that we can clean everything up. All right, so 12:54. All right, so you're talking about this one right here, right? I just want to make sure. This candle right here. Is this one you're referring to right here, Martha? Let me see, use a screenshot. Okay, so I think you're talking about this one right here, right? So this right here would be a wick rejection. because the wick is touching the body. I mean, the wick is touching the pivot. So yes, to your example, this would be a wick rejection. This red candle right here would not be a wick rejection because it's not touching the pivot. Okay, so basically your question is, okay, if the wick ever goes past, yeah, that's exactly what a rejection is, because this means that price came down below and then it rejected off the pivot and pushed above it, right? So yeah, just like with the other examples here. So this right here, that's a wick rejection because this means that price comes below, bounces off. Same with this one over here. This candle comes below, bounces off. That's considered a wick rejection. This right here, price was in between. If price came below it further, then this would be considered a wick rejection off the screen candle, but it didn't. So yeah, that would be considered a wick rejection. If there's anything else that you're confused with, just, feel free to let me know. But yet, whenever I have like these criteria here, just make sure that you, and it's not just you, it's just, this is a question that I get from a lot of people, not specifically for this, but like for other strategies, because a lot of the strategies require wick rejections off the pivots. I feel like there's a lot of confusion because people confuse wick rejection, meaning that they think it's like, a clear rejection. I can see where your question's coming from, because I could possibly, like I think you might be seeing this as a wick rejection. So let me find an example right here, because I've gotten this question before. We've been going over this stuff for a while now. Like where it's just touching it, but not exactly going through it. Going through it is actually better. That's a better wick rejection because you could have a better confirmation of, price bouncing from that point. I think this might be an example here. Yeah, like something like this, right? Like if you see it just touching the pivot, you would think that, okay, that's probably the rejection. But realistically, the stronger the wick or the bigger the wick, the better the rejection. So for example, right here, this one went through all these pivots right here. This means it's a really strong rejection off it from there. So you see how this candle right here is a strong red candle that happened after it. So this right here would be considered a strong wick rejection. Whenever you get a big wick and it's going through like multiple pivots, you can pretty much anticipate that price is likely to bounce off it a little heavier than usual, especially if it's a green candle, because it was attempting to push past it, but then it had a strong bounce from it. So yeah, no problem. All right, Martha. So that is it right there. Let me scroll up real quick. We have another question over here from AR. So AR is asking, did you get rid of the gold bars? I might have. I don't know. I haven't really. The gold bars don't really. I mean, they're not really useful to me because I'm looking at multiple charts, so I don't really need them. But I think I might have taken them off just to clean it up a little bit, because I prefer to see colors instead of gold. So let me see. I think I do have them turned off here. No, so I don't have them turned off here. They're just set to the wrong settings. But I'm probably going to turn them off because I don't really need them. So let's see, 5 and 10. Yeah, so I turned the gold bars back on right here, AR, but I mean, I personally don't really need them, so I'm just going to turn them off. They're not really necessary for me specifically, because I'm already looking at all the charts. So like, for example, over here, I have like all my charts open, so I don't really need the gold bars. I mean, I personally don't think they're really, I mean, they are useful to people who don't have like multiple charts open, but whenever I'm looking at my charts, I typically have like for this one, I have 6 charts open. And then for when I go on the shorter time frames over here, I have 3 of them open already. So for me personally, I might have turned them off on this one. Let me check. Yeah, I actually turned them off on this one because I just don't need them. I mean, if they were required, then I would use them, but I'm looking at like multiple time frames at all times. So it's not really necessary for me specifically. I mean, if they help you, then, keep them on. But for me personally, I don't really need them on because it's easy for me to just look over here. If this is green, 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 etc., then it lines up with what I'm looking for. But for the most part, I just don't really need it. All right, let me scroll over here real quick and see if there's anything else. All right, I think that's it for the questions. So if you guys have any other questions, feel free to put them in the chat. Otherwise, I'll pretty much just review the entries that came up today. There were a lot of entries, so I mean, we'll probably just focus on the ones that we actually took, but I'll also explain like a couple of the other ones that we didn't take because price was around sessions. Let's see, question from Song. Song's asking if 1134 be considered an entry for a momentum scalp variation or a momentum scalp. So let me go over there real quick and I'll just move forward a little bit. So Song's asking about 1134. All right, so I'm letting this run through a little bit here. It's going to take some time, but it's almost there. It's already 11 o'clock. 1140, 1134. $11. 34. Oh, actually, because of the, sorry, I just realized that I was like looking at this here song, but I just realized that we got to move forward because the trend changed. Yeah. Okay. So let me move forward a little more. So I'm looking at that specific entry that you're referring to right here at 1134. It looks like it's at the session. So I mean, I probably wouldn't have taken it because it's at the sessions, but let me just look over here on these other time frames. Okay, so it was bearish. All right, so entry came up right here, but it was like right at the sessions. I'll just rewind to that specific candle. 34. And that's fine where it's at. Let's see, question from Alan. Alan's asking, any chance of spreading your bars out a little? So do you want me to like zoom in a little bit? Alan, is that what you're referring to? Like zoom in a little more? I think that's what you mean, right? If I can zoom in. Okay, yeah, no. Yeah, so here's it zoomed in a little more. Here's the 10-minute, here's the 5-minute, and here is the 1 minute over here. So for the 1 minute, Song's asking if this would be a momentum scalp entry. So just looking at it from a bird's eye view, it does look fine for a momentum scalp and a momentum scalp variation. I'll go over here and just put the criteria again so that we can look over the requirements. So for the momentum scalp variation, we'll just look at that one first. So confirm overall trend on the 1, 5, and 10-minute time frame. So looking over here on the 1, 5, and 10, you can see that price is bearish, and the reason for that is because price is below the pivots, trend meters red, and the pivots are angling down across all 3 time frames. So with that said, we have a bearish bias across the board right here. Second criteria is you want to confirm momentum aligns on the 5 and 10. You can see over here on the 5, we have a sell signal. Same with the 10-minute over here, we have a sell signal as well. So this right here meets criteria for requirements 1 and 2. For requirement 3, you want to confirm a retracement momentum signal on the 1 minute. We have that over here with this green candle. So this right here would be the retracement momentum signal. For step 4, you want to confirm that price closed past the pivots in retracement on the 1 minute. So with this candle right here, this pretty much confirms it because price was below the pivots here. And you can assume any of these down here or the retracement. It could be any of these candles right here because price was below the pivots. This green candle right here closed above it. And this buy signal here actually closed like way past all of the pivots. So with that said, we have requirements 1 through 4 met. Requirement 5, you want to confirm price closed past the pivots in correction of the overall trend. Since the overall trend here was bearish, when price closes below any of the pivots, or below all the pivots actually, this would confirm that it's back in a downwards trend. So with that said, we had price close below it on this momentum signal, and that would be requirement number 5. Requirement number 6, you want to enter on the close of the candle. So let's go ahead and maximize this right here so it's easier to see. I'll turn on volume because volume is not required for this specific strategy. All right, so with that said, we have everything pretty much lined up here. We have the sell signal, we have a downwards trend, we have price breaking and closing below the pivots. This here would be an entry for a sell, applying the momentum scalp variation. So that's a criteria for the momentum scalp variation. On top of that, this was also a momentum scalp entry, just a regular momentum scalp. And the reason for that is because we have the overall trend, of course, was bearish. We have momentum on the 5 and 10, and then we have momentum here on the 1 minute. So this entry right here would be an entry for both momentum scalp variation and momentum scalp. The only red flag here that I would probably avoid was the fact that it was at the sessions. As you guys know, whenever price gets near these sessions, price gets kind of weird, where it kind of goes back and forth. You can see right here, if I just turn everything off, you guys can see when price got near the sessions right here, it just goes sideways, right? So price gets right here, it rejects off these points, bounces off. Once it breaks through it, it doesn't necessarily drop completely. It just kind of goes back and forth, back and forth. However, all of the criteria right here is met. So you would take the entry right here if you were to, apply the entry. Let's see. Song also mentioned it got so confluent entry for a variation plus scalp and high-low session risk. Yeah, let me check that real quick. So let's see. I'm going to turn everything back on real quick to see what confluences we have here. So yeah, actually there was a lot of confluences here. So if I saw this here, I probably would have taken it. There's a lot of confluences in your song. So you're 100% right. There's a V1 variation right here. This is a reversal pattern. I don't have a high-low scalp here for confirmation because this candle over here already broke past it. So this would be the low. But it already broke past it. You probably saw it on a higher time frame. I'm not sure if that was the case. Let me go over here real quick. Turn everything back on over here. So at 11 o'clock today, let's see. I'm just looking across real quick. So I don't see any high low here, but that's fine. The high low is not really necessary because you have so many other confluences here. So looking over here, here's one confluence. You have a V1 variation right here. This is a reversal pattern. So you can see prices coming down, comes back up. You get a V1 variation. This is a confirmation that price is likely to come back down. So that's one confluence right there. Another confluence that you have here is that it's both a momentum scalp and momentum scalp variation. Also, you can see that the momentum scalp failure right here hit TP. So it'd be, alignment with all the strategies. On top of that, you have volume here that is above average. So you got a lot of confluences here. And let's see if it plays out. So it actually does play out. It's a full TP. So yeah, looking at this here. So from a bird's eye view, I wouldn't have taken it because it was at the sessions. But if you guys sat in on the live session today, there's a lot of other confluences that you guys can use. I think one of the main ones would be the V1 variation. This would be one thing to always look for whenever you guys are taking an entry. I personally look at this and everyone else in the group who are mentors. So like Kip does it, Sisu does it, like basically all the entries that Sisu takes, he looks for this specific thing. So he looks for this here and he looks for a break and close past high low. So Sisu really likes to apply the high low scalp, but he uses it with confluence of the V1 variation. Kip also applies it pretty much all entries he took here, all full TP. He looks for a confluence of a V1 variation, and then he follows a continuation with one of the momentum scalp strategies. So Kip does it. He had all wins today. Sisu does it as well. He had all wins today as well. I don't know if Sisu had another account that was running today too. Yeah, I think Sisu just took one trade because he was busy today. Oh no, he took a lot actually. So you can see right here, these are his trades right there. All wins. Because he looks for this confluence as well. So you did that proper song. Like for example, right here, I probably would have taken this trade if I fully analyzed it like you did. If I saw a V1 variation here, I saw volume was above average. Although these aren't criteria or requirements for the strategy, these are confluences. So like, for example, if you see an entry here and it's at the sessions, typically I would avoid it. But if I see all these confluences here, a V1 variation reversal pattern, indicating that price is likely to drop. And if I'm going for 100 pips here, it's probably going to hit. 100 pips isn't that big of a move, especially at 1135 when volatility is a little higher. So yeah, I'm not sure if you took it, Song, but if you did, I would have been with you with this analysis here. If they didn't have the V1 variation here, I probably wouldn't have taken it because the sessions here is one of the biggest red flags that I look for when looking for entry. So like there was another momentum scalp right here. I probably wouldn't have taken this one This one looks like it hits TP2, but I wouldn't have taken it because there's just not enough confluences here. There's no V1 variation. Volume was below average. So for this one right here, I would have skipped it, but the one that you identified, Song, I think it looks like a good entry. So yeah, nice catch right there if you caught it. And if not, it was still a good job by identifying the confluences here. I mean, there's a lot of moving pieces here. That's why there's building blocks to it. So if you guys are brand new and you guys are still learning everything, that's why I focus on you guys just learning these strategies right here. So once you learn these strategies here, you can add on these other strategies. So this V1 variation is going to be right here. If you guys traded with me last year, this is one of the main strategies that we applied. The cool thing with this is that now you can put 2 and 2 together. You can have a reversal strategy, this one, which is counter trend, and then you can tie it with a continuation strategy. So you have 2 confluences there, and it's likely a hit if it comes up. So this right here would be a V1 variation. And then the other strategy that Sisu typically applies would be the high-low scalp. So I have a lot of strategies here, but you guys want to start with the basics first because you guys want to have a foundation. Once you have this foundation, you can start adding on other confluences to your entries. So, all right, let me see if there's anything else over here. Yeah, Alan said someone sent you a message about less explaining and more watching the market. I think that is a great idea and answer your questions here. Yeah, and I agree, Alan. I think that's what we're going to do for the most part. I'm always open to have more mentoring sessions in the future. So like, I know we have our group mentoring session on Mondays, but if you guys ever want me to have another mentoring session, like if you had a really good session or if you had a bad session and you want me to analyze stuff, just let me know. Like I'm always open to have sessions with you guys. I just want to make sure that people actually want them because I don't want to keep going on these sessions and nobody actually wants this session, right? Because a lot of people are just sitting here and not really, they're not really getting stimulated, right? Because I want you guys to actually look at these trades here. I want you guys to have actual questions so that I can help you guys understand any mistakes that were made or any corrections that can be corrected so that you guys don't make the same mistakes moving forward. But yeah, definitely, Alan. I think that's going to be the case. Let me scroll up a little bit. Let's see, question from Andy. Andy's asking, how many pips should we be trading away from the sessions open price? What's too close? So let me see if I can find an example over here, Andy. Let's see. So for this one right here, and I'll just replay, this is too close for me for sure. So this is a momentum scalp entry right here. Let me turn off the volume. So this right here would be a momentum scalp. The way that I figure out if it's too close or not is if you set up your TP stop loss there. So for example, here you'd use a 10-30 split because that's where the range is at. If price has to go past the sessions or opening price, then that would be considered too close. Because in order for you to hit your TP, price would have to get past the sessions, right? And if you move forward right here, you can see how choppy it was, right? You don't want to be caught in a position like this where you enter a trade and then it goes straight into drawdown. So this is where it would be considered too close. Let me go back a little further and I'll see if there's any more examples here that I can show you. So the main thing is basically whenever price has to touch the sessions. So right here, there's another entry right here, right? This is a momentum scalp entry because we have a sell signal here, trend's bearish. For this one right here, this would be too close. The reason why it'd be too close is because it's touching. So if this wasn't touching the sessions, it'd be okay. But since it's touching right here, look to see how price moves after the next candle opens up. It comes down a little bit and then it goes into some heavy drawdown because it just pulls right back to the sessions right there. So basically, whenever price is touching any of the red flags or getting close to it, that's where you'd avoid the trade. I know here it would still hit, but to be on the safe side, I would have just skipped it. Unless you had another confluence indicating that price was likely to drop further, kind of like what Song had when he was looking. So again, right here, another sell signal, but it's right at the sessions. This would be considered too close. Let me check this one right here because there's another one right here. This might be a close one. I don't know if it's not super close, but let's see if it actually, if it has to go past it. All right, so this one's actually a really good example, Andy. So see right here how like price, to reach TP, it's not necessarily touching it. It's close, but it's not too close, right? It's not close to where it has to touch it to break through. So for this right here, I would have taken this entry. This again would be another momentum scalp. You can see price is below the pivots, trend is red, trend meter is red as well. If you took this trade here, you see price comes down a little bit, retraces up, but then it ends up coming down. And look where it bounces off of. See right here where it bounces off right there? That's where you don't want to be. You don't want to be where price has to touch it. But since price could get to your TP before touching it, this right here would be okay. So this right here would be okay. And here's another example right here for a sell. This right here for sure would be okay. So with this one, you got a lot of space here. Let's see if a 1030 split would be better or, okay. So for this right here, I would probably go for 1030 because if you go back like, X amount of candles right here, yeah, like 10 minutes, you can see that this is still going to be eating up within the liquidity from this point. So if price retraces up, that's cool. I mean, if you want to be super careful, you could have went for a bigger move here. You could have went for like a 25.50 if you wanted to. It just depends on the movement. If the market's moving quick, you can see here that the sessions is way far below. So whether you used a 1030 split or a 25.50, either one would be perfectly fine. So this one right here, if you went for 100 pips, it would have straight to your TP. If you went for 25 points or 250 pips, it still would hit your TP. It just would have taken longer. And yeah, does that make sense, Andy? Okay, gotcha. Yeah, it's not really that difficult. So I feel like whenever we have these criteria and requirements on the screen, a lot of people like make it a little more complicated than it is. But realistically, you just want to make sure that it's not touching, because that's where you get into trouble, right? If price gets really close to it, like this one right here. So this one's close to it, or actually not that one. Yeah, like this one was close to it. So like, I'd be kind of iffy about taking this here. Like if I felt really comfortable. So the reason why I would have taken this right here, Andy, like I know it's pretty close to it, but the reason why I would have been okay with it is a confluence that I was just referring to earlier, right? This is a V1 variation. So I'm just going to show you guys why this is important, because the V1 variation, this strategy is a reversal strategy, but it's not meant to identify reversals against the trend. This is meant to identify reversals in correction of the trend. So we have a bearish trend over here, right? So price is coming down, and see how from this bottom part right here, price starts to retrace up. So when you get this setup right here for a V1 variation, this is a reversal pattern. So price is retracing up right here. Once you see that double body, this is an indication that, okay, price is going to come back down because it needs to correct back down in the proper direction of the trend. So seeing this right here, if I saw this sell signal, I'm like, okay, this reversal pattern is coming down. So I already know price is going to come down at least to the sessions, right? So with price coming down to the sessions right there, your TP is right before it, I could be out in the clear. So like once it hits my TP, I'm already out with profit and I don't have to get caught in this position here. So price runs down, kind of bounces up a little bit, blasts right through my TP. And right there, I'm already out. So it's at the sessions, but I don't care at that point because I'm already out in profit. So it helps a lot when you guys use these confluences here. I know it might be a little complicated for new traders, or if you guys are new to my strategies, but I think this is like the main confluence that you guys can use, the V1, because it pretty much gives you a storyline. So you see how price is coming down, price is retracing right here. Once you see this right here, you're like, all right, for sure, price is actually going to come back down in correction. And I can show you guys another example over here, how that plays out, because it's so simple, but like I feel like a lot of people forget about it. So again, right here, I know this wasn't an entry that I personally would have taken, but I just want to show you guys an example. So you can see right here how price is pushing up, right? So price is reversing right here. From this point right here, price is now retracing. So price is pushing up, it's retracing down. And you see right here how there's a double body. There's a double body with a high low. This is a V1 variation. So once you see a pattern like this is indicating that price is going to correct back up. So you see price pushes up, retraces, reversal right here in correction of the trend. And look where price goes is after that. It goes straight up. So, and I've identified, that's the whole reason I created this indicator, because what happened was like a few years back, we would take trades and then price would just reverse on us. And we're like, what the hell? Like, well, why is price reversing on us, right? And I started to study the charts and I was like, okay, every time price reverses, it's like when I see this pattern right here. So I created this indicator, this high-low indicator, so that we can identify when these reversals happen. So, you know, every time we find a problem with the charts or like analyzing and stuff like that, I always come up with a solution. It's just finding logic behind your analysis, right? Like whenever you guys start losing trades or whenever we start losing trades, I always come up with ways to fix things or a solution, like another tool for us to use to avoid us from losing those trades. So super simple and straightforward. Let's see, Johnny's asking, you guys call that the double candlestick? No, so this would be a V1 variation. Johnny, it's a strategy that we applied a lot last year. I don't think you were around when we were applying it. It's called the K2 1 minute variation strategy, the V1. Let me pull up the course real quick and I'll see if I can show you guys. So it's an actual strategy, but we don't really use it like all the time. We only use it when the trend is super heavy. And now I don't even apply it by itself. I just apply it as a confluence, but it is a standalone strategy. So like, it's a strategy that has a pretty decent win rate. It's kind of sketchy though, because you're pretty much going counter trend, because what happens here is price is coming down. So for example, you see a V1 variation right here, this double body, or I guess you could call it double body rejection, because we can either do a double body or double wick. So you can see right here, the first requirement is confirm overall bias. We'll just assume here that it was bullish. Confirm the high low. We have the low right here. Third, confirm candle following high low is a double wick or a double body. So right here we have a low, a high low candle, and this one right here is a double body. So if you see the bodies lined up perfectly, and if you need a visualization, you can use the horizontal ray, use a magnet tool, and then draw it on the bottom of the body. So if it's flush like that, where it's not going past it, that's a double body. And then vice versa. So not just a double body, but you can also identify a double wick. So this right here as well is a double body. I'm gonna try to find a double wick. The double wicks don't come up as often. Yeah, no double wick. The double wick would have to be on the same level. And the logic behind this is that there's a power struggle. So like whenever you see a pattern like that, a double body. So again, right here, see how there's a double body? This is a power struggle. So this is a reversal pattern because the red candle is indicating that price is coming down. And you can see right here that as soon as price comes down, it pushes right back up, right? So basically what this indicates is that the traders or whoever's controlling the market, they're trying to push price down. But whoever is going against them is like, no, we're not going to push price down. We're going to push price right back up. That's why you have the double body. And then again, right here, if you have a double body, it's the same thing in the opposite direction. So you can see from this green candle, price is pushing up, and then whoever was trying to push price up just got shut down. So say a market maker institution is pushing price up, another institution is like, no, we're going to keep pushing price down. So they create a double body there, and it pushes price down lower. It's just, you're basically like going into the mind of these institutions and market makers, because they're the ones who control the market. Like me, you, and everybody in the group, there's no way we could control the market because we don't have like billions of dollars to like trade, right? We don't have like that much money to push market around. So what we're doing here is we're pretty much reading their language. Like these patterns here that come up on the chart is basically language of the market makers institutions. But we're able to decipher what it means because these patterns continue playing around. They don't happen very often, but when they do happen, it gives you a hint like, okay, this is what they're doing. And then you can take that, you could use that to your advantage. So here's a double wick right here, Johnny. So we had double bodies earlier, and this right here would be a double wick. Let me just turn off the pivot so you can see it better. Turn off momentum, turn off the sessions, turn off the pivots. So right here, this is actually a double body and a double wick. So you can see right there, if you want to measure it, you can just use your horizontal ray tool, use the magnet tool, latch it to the bottom of the wick, and you can see that the wicks are on the same exact level, right? So it doesn't happen very often, but when it's on the same exact level, this is an indication that there's a power struggle. So price drops down below right here. This drops below and it hits a low, and then it pushes right back up. So from there, you can see price kind of pushes up from that point. It's a double body and it's a double wick. If you want to go off the wick, you just measure the wick. If you want to go off the body, you measure the body from there. So, and if you guys want to learn this strategy, let me pull up the course real quick. This used to be one of our favorite strategies. We used to apply this like every day. There's actually 3 different variations. So you guys know how now we have 3 strategies: momentum scalp failure, momentum scalp variation, and a momentum scalp, just regular momentum scalp. For the variations over here, we had a V1 variation, V2 variation, and a V3 variation. This is all from my practice, because I pretty much just analyzed the charts for like a whole year. And I was trying to figure out, okay, what does the chart do, or what does the market do when it reverses? And I saw these patterns. So I was like, okay, this is a V1 variation, right? I'm like, whenever this happens, price typically goes opposite. And then over here, same thing, except it's just a little different. It's like you see a low, and then, so this right here would actually be a V1 variation, and it would also be a V2 variation. So for this right here, you want to confirm the low is a red candle. You want to confirm the following candle is a strong candle. So a big push to the upside, no wick on the top. And this right here pretty much indicates that, okay, we're having power. The power struggle is starting to push to the upside. It's going to reverse. So a couple different variations right here. And then variation V3, this is like the least accurate, because it's like the easiest one. It just has opposite candle movements. But to pull up if I pull up the course here, let me see. If you guys want to review that strategy, just scroll down to, it's like in the older modules, scroll down to scalping strategies, and you'll see them right here. Variation V1, variation V2, variation V3. These all work very well. Triple confluence, I applied this today as well. And pivot scalp too, and high-low scalp. So pretty much all of these 4 strategies right here, or 5 strategies, they were pretty much the ones that I use as a confluence today. Let's see, question from Andy. Andy's asking, is there any harm in having the pivot lines one color, or is there a reason for multiple colors? So there really isn't much of a harm, but it helps to identify. So like, let me just take everything off the chart here. So the colors of the pivots are really just to show you the strength of the pivot, right? So let me scroll back a little bit. Let me just turn off the candles. So there's no harm in changing. So like, if you don't really care what the strength is, Andy, it's perfectly fine to just color them one color. Like, I know some people do that because they just look for the bounces off the pivots, but the colors are just like to show you what's stronger. So like, that's why I made like the red one level 4, because whenever price crosses level 4, so you can see whenever like level 4 is on top of all of them, price comes down nicely, right? It's in a downwards trend. And then vice versa, when price goes the opposite and you have the red pivot below it, this indicates that price is now strong and going to the upside. So see how price goes up from here? So there's no, I mean, you can have them all one color. If you're fine with that, and you don't care like how the strength is for the pivots, then you can have them all one color. I personally like them with the color because you can kind of predict where price is going. Like for example, here, see how price was going up over here? And you have the red pivot below all of the other pivots. So red is level 4, orange is level 3, blue is level 2, and green is level 1, which is the weakest one. This one will cross over like every pivot. Like you'll see how it crosses over here, but it's not very strong. But whenever you see the red one come below all of them, so if all the pivots go above the red, or what you can do here too, Andy, if you want to make it really simple, just keep the red one. I think red would be yeah, it represents strength. So if you want to have them all in one color, I think you just keep the red one. That'd probably be the best way to do it. Because if you just keep the red one on, let me show you. So let's just color everything blue. Right. So check this out. If you have only the red one on, this will show the strength of the trend. So when price crosses above, you can see price goes up pretty heavily. And then when price crosses back below over here, see how it shows you how the trend changes? So it shows strength right here. So if you really want to just keep it simple, you can do this. You can just leave level 4 like red, or like one different color, because it'll show you the direction of price. Because I know this might be a little confusing for the other colors, but you can see over here as price pushes around, like I can go back pretty far. If you just look at these here, whenever price crosses the red one, it goes down super heavy. Price cross below, goes down super heavy. Price crosses above right here, it goes up super heavy, and etc. It just goes down, goes up, goes down. etc.
Your company, I think not.
Yeah, but it's all up to preference. Like for me, I'm already used to seeing the colors, so it doesn't really make a big difference for me personally. But if you want to change the colors, you know, there's no harm in it if as long as you use it properly. So yeah, it's really up to preference. Yeah, no problem, Andy. Question from Johnny. Johnny's asking, any thoughts or advice on trading in the Asia session? So for me personally, Johnny, I only trade during Asia session from 6 to 10. It's not always going to be good though. So it like there's no specific time where there's not like a specific day where you should be trading. Like whenever you trade in Asia session, let me see if I can show you real quick. So I'm going to go over here on a higher time frame. It's going to be easier for us to see. I'm just turning everything back on over here so I don't confuse anybody. Confuse myself actually. So let's go on the 10-minute because the 10 minutes actually easier to see. Maximize this. So let's see Asia session from Thursday. Or you know what? Let's just go to a single chart. So I mean, I personally don't like trading Asia. I only trade Asia like when I need to. Like if I feel the itch to trade, or if I need to like make some money, if I'm doing a challenge or something, then of course you have to trade during that time sometimes, especially if you're on your last day. But let me just mark up the times. So I trade basically from 6 o'clock until 10 p.m. If I trade Asia, that's the only times I trade. 6 o'clock would be, I believe, 1,800 hours. Yeah. So right here from 1,800 hours up until 10 o'clock, which would be 2,200 hours. So this is last Thursday. Imagine if you were trading right here during Asia session, Johnny, you literally would not make any money because the price was not moving at all. So yeah, so like see this right here, it barely moves like 400 pips. The thing is the spread's even wider during this time. So usually during New York session, you can be in and out super quick, right? For this trade here, you'll probably be holding this for like 2-3 hours. It's no longer a scalp at that time. Now it becomes an intraday trade. So, you know, you need at least like a 500 to 600 pip move to make even any profit. Anything below that, you want like closer to 1,000 pip move. This is a 430 pip move. This is like barely covers your spread and might give you like maybe some profit, but for the most part, you can see how it moves over here. This is this right here would be New York session, and you can see it's a huge difference, right? Like you measure this. So this is 4,000 pip move. It's easy for you to just catch 100 pips here and there. For this right here, it's like almost impossible to catch anything. And the thing here is that it screws with you because once it hits 10 o'clock, now it keeps going sideways even longer. And then if you held on to it for too long, if you're lucky and you're in the proper direction, yeah, it blasts your TP. But if it wasn't, you know, you'd be stuck holding on to that position for a really long time. Let's check Wednesday over here. 2,200. And so you can see over here, there's going to be some days where it's actually moving. So right here, this was Wednesday. I think this was because there was news at night. So there was news at night. So on a day like this would be okay to trade in. So right here, you might be lucky if you catch a sell here, like while it's dropping. But again, you know, you got to be you have to like actually be looking at the chart. So you can see how big of a difference it is. Right here's a 2,000 pip move. You could maybe catch a move here, like 1 or 2 trades. But yeah, back over here on Thursday, nothing, right? This is Wednesday. Let's go to Tuesday. I'll show you another example over here. This is why I personally just don't recommend people trade, but you know, if you have to, you got to do what you got to do. So right here again, you can see like from 6 until, let's see.
Were they going to give you up to pay your off?
Actually, it's at 1,800.
Really?
Yeah, again, right here, Johnny, you can see there's like no movement at all. You'll be holding on to this trade for a long time. It moves like 600 pips. And then if you get an entry right in the middle, you pretty much be stuck holding that position for a long time. So for me personally, I don't recommend it, but if you do want to trade, I do recommend looking at it from like 6 to 10. If you see volatility in the market, then yeah, go ahead and try to catch something, but you got to keep in mind that the spread is wide. Like right now I'm looking at my spread is 300 pips. I think it's 300 pips. Oh, because the market's closed. Yeah. Market's closed right now. So the spread's like super wide, but it still stays pretty wide during Asia session. So the thing that you want to keep in mind is that if you're looking for a trade, you got to cover at least that much before you start making any profit, right? So if you don't cover this yet, you're not going to make any profit. And then from there, it's like, so like say, for example, you enter a trade right here, right? Now you're like, okay, I'm stuck in this position for a long time. You got to cover this before you make any profit. So you got to cover this first. And then on top of that, you still got to cover your TP, another 100 pips. So you'll be holding on to this position for like 3 hours. At that time, it's no longer a scalp. Yeah, no problem, Johnny. So yeah, only trade Asia if it's like absolutely necessary. I know sometimes you guys, like, people get FOMO because they see me posting profits or they see other people posting profits during Asia. But just keep in mind that when I'm trading Asia, I'm probably stressed out. I'm super stressed out because I don't want to be holding on to those positions for more than a couple of minutes. I have to hold on to it for like an hour, 2 hours. You know, sometimes I'll go and do something. I come back and I'm still like in the negative. And it's been like 2 or 3 hours. So it's not really worth it unless you're okay with being stressed out. Personally, I don't think it's worth the risk. Let's see, question over here from Barty. Barty's asking, hey, bro, what's your total allocation now? 1 mil. Across all my accounts, yes, because I have, or actually, no. Actually, yes. Okay. I was trying to do the math in my head. Yeah, you're right. It is 1 mil because I have 3 MFFs and I have 2 FTMOs. I have 400 FTMO and 600 MFF. I don't use my TFF anymore. I don't even know if the account's still active. I think I took a trade. I just YOLO'd it and then I just lost it because I just didn't want to bother with it anymore. So yeah, I have across that much across the MFF and FTMO. I'm looking for other funding companies that I can probably run up on, but I don't have anything that I like found to be reliable yet. Not to say that there isn't anything out there that's reliable. It's just I haven't found anything myself. Yeah, Barty said, I've seen very few people like you to make the bag on a regular. Yeah, I mean, that's why I trade live every day, because I try to show you guys the that it's possible, right? I know a lot of people say it's not possible to profit every day. I mean, I show you guys here on the live session that, you know, I profit with you guys daily and we do it live during the live session. So it is possible. It's just not very easy. It depends on your type of trading style. So other than that, if you guys have any other questions, you know, feel free to put your questions in the chat. Gotcha. Beat said top tier is great. Yeah, I've been wanting to try out top tier because I think Rashida mentioned that they allow copiers now. Back in the past, they didn't allow copiers, so I didn't use them. There's just no point because I couldn't copy to my other accounts. But if they do allow copiers, you know, I might go ahead and give them a try. I mean, if anything, I'm just throwing away like $1,000 anyways. It's like whatever. It's like the risk to reward with like trying out another funding company that actually pays out is beneficial, right? Because I'll be risking like $1,000 to do, or $2,000 to do a challenge. But if I pass that challenge and I get funded and I get paid out, I get the refund, and then on top of that, I get extra profits. So I might try them out. Thanks, Beach, for the heads up. It's just like, where's Kip? Is Kip here? Like, Kip talked me into going back to TFF, and they were good for like a good month or so, and then they started to like not work as well. So, and I thought TFF would be good, but it's all good. It happens. No harm there. I did get a payout with them, so I did make my money back. So it's not like I lost anything with them. It was just a lot of headache and annoyance. Barty's asking if I can show my trades from today. Yeah, so let's go over here to the charts. So if there's any other questions, guys, feel free to put them in the chat. Otherwise, I'll go over the trades from today. There was a lot of trades that came up today, but there was only a few that I personally took. So there's only 2 trades that counted from today because I actually took them, which would be these 2 over here. They were both momentum scalp entries. It was this one right here. This one was at a red flag, but it met my criteria. So I took that trade there. And then the second one over here, which I entered late. So I'm just going to rewind the chart to 8 o'clock.
So this 5 lights here.
And I'll show you guys a couple entries that came up today. I just show you guys on the 1 minute because we already knew that the bias here was pretty much bullish for the entire day. So I'm just going to go over here and maximize the 1 minute. We'll just assume everything was bullish because we already knew everything was bullish for market open today.
Oh, so when you stop this shuts off?
All right, let me go to markup 6:30 so that you guys can see where market opened at. All right, so market opened right here at 6:30. Let me go over every entry that came up. I think the first official entry we took was at 7:11 or 7 o'clock. So I'll go over everything that came up over here. But then we'll first go through the first entries that came up. So looking at this over here, we were looking for momentum scalp. Momentum scalp. I'll put the criteria over here for the requirements. Momentum scalp variation or momentum scalp failure. Momentum scalp variation and regular momentum scalp. Okay, so I'll just go and rewind this so that you can see it from like when it actually happened. So there was one entry that came up over here, but I didn't take it because it was right at the sessions. Right, so this is the first entry that came up today. I didn't take this one, so this didn't count towards the results. It was just an entry that did come up. I know some people in the group did take it. I personally didn't take it because it was right at the session. So right here would be a momentum scalp failure. Looking at the criteria here, confirm overall trend. We already knew that was bullish from this morning. It was bullish up until 8 o'clock. We confirmed the retracement momentum signal. There was a sell signal right here against the trend. Volume over here was below average. This met criteria, and this would have been a momentum scalp failure. I didn't take the trade because it was at the sessions. In order for me to reach my TP, I'd have to break past the sessions right here, which is too risky for me personally. So that's why I didn't take that trade there. So this trade right here went straight to profit target. That's a first win that came up today. I didn't take the trade, but it was an entry if you were disregarding the red flags. The next entry that came up here would be the momentum scalp variation, which came up. Just make that smaller. Okay, so this one right here was a momentum scalp variation. Again, right here was right at the sessions, right? So I wouldn't have taken that trade, obviously. This right here would double up as both the momentum scalp variation and a momentum scalp. So for the first criteria, we confirm that the overall trend was bullish. Second, you want to confirm that momentum aligned on the 5 and 10. We can just assume that because we already knew it was bullish. So requirements 1 and 2 are met. Requirement 3, you want to confirm retracement momentum signal, which was right here, this red sell signal right here. Fourth, you want to confirm price closed past the pivots and retracement. So price was up right here, then it retraced back below here. This is a retracement. And then step 5, you want to confirm price closed past the pivots in correction of the overall trend. So price closed below it here, and then it closed back above it right here. With that said, you could have entered on the close of the candle, which would have been right there. Criteria is met, be a 10-30 split. Again, for the same candle, it'd also be a momentum scalp entry. We had overall trend was bullish. We had bullish momentum on the 5 and 10. And then we had the 1 minute momentum here, which would provide an entry for momentum scalp. If you would have taken the trade there, straight to profit target. So 2 entries right there, or 3 entries actually. It was 1 entry for momentum scalp failure. And then this candle right here was 2 strategies on the same candle. I wouldn't have taken the trade because of the sessions. If we had like another confluence here, like a V1 variation or some sort of confirmation that price was going to push up, I would have taken that trade there. So I didn't take that one there. This right here would have been a momentum scalp failure. I totally missed this one. I forgot why I missed it, but I missed this one because this one came up right here, and this would be a momentum scalp failure. Confirm overall trend, obviously it was bullish. Confirm retracement momentum signal. The sell signal here would have been the retracement. This actually would have been a perfect entry. I can't remember. I think I was just, I was distracted. I was answering questions and then I missed this trade here, but this here would have been a momentum scalp failure. I didn't take this one here.
There's no way that it's
Same thing, 1030 split, full TP on that next candle. So there's like 3 entries right there that came up. These 2 I didn't take because of the red flags. This one right here, I just totally missed. Well, I wouldn't have taken it because I don't even apply the momentum scalp failure. I use this as a confluence.
Yeah.
All right, price closed above right here. I think this is the one that we actually took. So price kind of bounced up and around right there. Kind of came back up. Okay, so for this one right here, this would have been a momentum scalp variation. Again, overall trend was bearish. Momentum aligned on the 5 and 10. We had a retracement momentum signal right here. Price retraced below, closed back above right there. This was a momentum scalp variation. I think this is the one that we took, but I can't remember if this is. Oh no, I think it was because of the the red flag. So I didn't take this trade here either. Red flag again. And of course it was a full TP. So obviously you guys can see the red flags here. You guys don't have to follow them, but for me personally, I've lost so many trades at these red flags where I just don't bother taking them. Again, right here, here's another entry. This would be a momentum scalp. Overall trend is bullish. Bullish momentum on the 5 and 10. This one here would be the catalyst for entry. You take this for a buy entry for a long position right there. For this one, you would not use a 1030 split. You'd actually use a 2550 because this is a huge candle. So you'd have to use a bigger, well, not the specific candle. Well, for one, the candle is huge. And for 2, the range over here is a lot wider, right? So if price was to retrace down, it would stop you out before you push back up to hit your TP. So for this right here, I'd use a 2550 because it would cover the pullback right here if this pullback was to happen. So this right here, momentum scalp entry, price pushed above. I think this is the entry I took. Yeah. So this is the one I took. It was a momentum scalp, but I entered late. So I entered this late. This is the one that we took here. Price pulled back a little bit. I was like, okay, this was going to hit. The reason why I was okay with taking this right here is because we had a confluence on the higher time frame. So if you guys remember from this morning, I think there was a confluence here on the 30-minute or something like that. Yeah, so on the 30-minute right here, we had a V1 variation. So I was like, okay, this is for sure going to push up. And then right here on the 5-minute as well. On the 5-minute, we had a V1 variation there. So I was like, okay, this is going to reverse back up, or it's going to correct back up in correction because there were so many confluences here. There's another one right here too, I believe. There's just a bunch of confluences. I was like, okay, I saw the V1 variation, and that's why I entered this one late right there. So I entered this late. I let it pull back a little bit. I entered for like a small discount here because the price was in drawdown. And then when price pushed up, it blasted right through my TP right there. Thanks, Sharon. Thanks for letting me know, sir. I didn't know people were not muted. All right, I just muted everybody. So yeah, this is the other entry right here. This is the one that we took. This was the official entry from today, the one that I counted because I took it with you guys. And there was a profit I locked in from that. I locked in 1,000, or I was up 3,000 at that time. So 3,000 on my FTMO 400K, 2,590 on my MFF number 1, 2,610 off my MFF number 2, and then 2,630 on my MFF number 3. So that was the first trade that we took that was official. And then we had another one that came up over here at 745. So let me go forward a little further. All right, so there's a momentum scalp failure here. I forgot why I didn't take it. I'm pretty sure there was a reason why I didn't take it, but let me check the timestamp for the entry that we took over here. Well, I mean, for one, I wouldn't have taken it because I don't take the momentum scalp failure. So that's a given. There was a momentum scalp failure right here. I didn't take it, but I think Maddie took it this morning. So for this right here is a 1030 split. Obviously went straight to TP. I didn't take that trade there, but there was another. This is the entry that came up at that point. I took the one that came up after it. So I waited for this one right here, actually. Okay. So I didn't take this one, but I took this one right here, which was a momentum scalp variation. So right here, we had price close above it. So again, overall trend was bullish, momentum line on the 5 and 10, retracement momentum signal happened right here. Price retraced below the pivots, closed back above it at that point right there. And this would be the entry for a momentum scalp variation. I think this is the other official entry that I took from this this morning session. So again, right there, 1030 split, everything lined up perfect. And went straight to profit target. So I took that trade right there. Here's the screenshot from that trade right here. Took that trade, went straight to full TP. And then I locked in 4,600 on my FTMO, 400K here, all wins. My MFF over here, 4,040, MFF number 2, 4,060, and then my MFF number 3, 4,070. And I think that was all the trades that we had for today. And let me see if that buy signal came up later. All right, so this right here would be the momentum scalp. Again, we had criteria here for a V1 variation. So I don't think I took this trade here, but I should have taken it. I think I just skipped it because it was too close to, I don't know, something happened. I just wasn't paying attention during that time, but this trade played out right here, went straight to profit target. So as you guys can see, there was about 1, 2, 3, 4, 5, 6, 7, 8 entries that came up today this morning. A lot of entries that came up today. We typically didn't have this last month, but it played out perfect. And then there's another one right here, another momentum scalp failure. I think it was getting close to 8 o'clock, so I just stopped trading at that time. But there were a lot of opportunities that came up here. Another one right there. Full TP. And I think that was it for the day. Yeah, 8 o'clock hit, and we were done trading at 8. So that's pretty much all of the entries that came up from today's live session. Let's see, iPhone's asking, when entering a trade 5 pips down already, should you still shoot for 10 pips or should it now be 5? So your TP should be based off what's on TradingView, iPhone. So like depending on like where you're at, like if you have an entry here, so like say this is a good example right here. So see how price like blasted through CP, but then it spiked back down for this one right here. So like say for example, you enter the trade, but you enter late. So you're like 5, you're like you mentioned, you're 5. I think you mean 50 pips, right? Not 5 pips, because it's by points. So for example, right here, at this point, say for example, you're like thinking about it too much and you're like, okay, should I enter this trade? Should I not? And then your price is already up in profit, right? And you enter late. If it hits TP right here, then I would recommend pulling out because that's your target price point, right? Target has already been hit. So if that's the case, you're already too late. You should just pull out for a small profit or for a small loss, and then just move on to the next one. So for this right here, if you got in late and then price spiked up and didn't hit your TP because say there was slippage or you just got out late, I would just close out of the trade because it's better to have a small loss, like maybe like a few bucks, rather than having a big loss, right? Because you could hold on to the position and it can like literally go opposite on you because the trade's already done. So what I recommend is just, stick to the trading plan. If it hits your TP on TradingView, then you're done. If you need to pull out for a small profit or a small loss, that's fine because there's going to be more entries that come up where you can make it right back. Yeah, no problem, iPhone. Question from Barty. Barty's asking, once you get funded on a real account, what percentage you have to maintain so that you don't lose the account? You don't have to maintain anything. So there's no more profit target. You can just you can be in negative for like a whole 6 months. Like say, for example, you get funded and then you just start to do some random stuff and you start to go into heavy drawdown and you're down like 8%, right? You could be down 8% for like 6 months, 12 months, however long. As long as you don't go past that 10%, you won't lose the account. So there's no more profit target. That's why for me right now, if you guys have seen, I'm on a 400K account right now, but I'm still taking my normal lot size. Like I should be using a 200 lot size, but I'm using 100 right now because I'm still getting comfortable to the bigger account because I haven't used a 400K account in like 2 years. The last time I had a 400K account, I didn't feel comfortable. So I had to split it back down to 2 200K accounts. So it's just trade psychology, right? If you're not used to trading a 400K account, it's going to mess with your head because your profits are going to be so high and your losses are going to be so big. And it's just going to mess with your thought process. So for me right now, I'm in no rush to of course I'm like throwing away profits because like, for example, today I made 4,600 on my 400K account. If I use a 200 lot size, like I'm supposed to, I would have been up, well over 8,000 for the day, but I'm not greedy, right? Because I have my trade psychology. Like I know how much I'm supposed to make. And I know that at the end of the day, I still won the trade. That's the main thing in my head. So for me personally, when I'm comfortable, I'll start using bigger lot sizes. But right now I'm still like kind of used to using these 100 lots because this is what I would use on my 200K account, even though it's a 400K. So yeah, there's no rush. Once you guys get funded, you guys should just trade what you guys feel comfortable with. And I would recommend getting your refund first. So just like use a small lot size and just make some profit and then get a refund for your challenge fees. So that if for worst case scenario, if you blow the account, at least you didn't lose any money. You can just move on and then do another challenge because you'll get that money back. So, all right, guys, if there's any other questions, feel free to put your questions in the chat. We pretty much went over all the trades from this morning. It's 3:12 right now. So we've been on this mentoring session for well over an hour. I'm down to stay on this session for as long as you guys need, but only if we have questions. So, just a reminder, guys, we're not doing mentoring sessions on Tuesday anymore regularly. That was mainly for like the February month because that was like for the new people. But if you guys want another mentoring session during the week, just send me a message. I'll put a poll in the group. If enough people are willing to show, then I'll show up for the mentoring session free of charge. And I'm just going to show up and teach you guys whatever you guys need help with. But I just don't want to be on a mentoring session and nobody shows up because it's just kind of a waste of time for me and for you guys if there's only like, 1 or 2 people showing up. All right, guys. So I think that's it for today. If you guys have any questions, feel free to message me. You can message me on Telegram. That's going to be the fastest way to get in touch. Otherwise, you guys can email me, Sean@KodiKaiTrades.com. And if you guys are new here and you guys want to learn these strategies, or if you guys have been here for a while and you guys want access to the indicators, just go on the website, KodiKaiTrades.com, click on unlock your free access right here. And then you'll have access to the entire course. You won't have the indicators, but you'll have access to the course. If you want to go and watch any of the strategies here, you can learn all the strategies. It's just, if you want access to the indicators, you guys can always upgrade at some point, but there's nothing required. Like I pretty much offer everything for free because this helps me. Like if you guys use my strategies and you guys are making profit on my strategies, it just shows me proof of concept that my stuff works. So if my stuff works, then obviously I'm going to go heavy on my stuff. Right. So, all right, guys, I think that's it for now. If you guys have any questions, feel free to reach out. Otherwise, I will be back here tomorrow for the next live session as we continue on with this trading week. So, all right, guys, have a great